Dan, so good to see you. Today, we're going to talk through 76 years of headlines, what market history teaches us about staying invested. From oil embargoes to global pandemics, the S&P 500 has endured decades of uncertainty and come out stronger over time. So let's break down historical data and talk through whether pre and post retirees should make any changes to their portfolio. And I'd like to start with this chart, which shows several events. And looking at it, Dan, what does this tell you about how the market responds to global events?
Yeah, well, the market does respond to global events, Aaron, and the observation I would want every investor to focus on here is that in the short term, it's very random and unpredictable.
Mm-hmm.
But in the long term, what we know and what we have 100 years of history showing is that the arrow is green and the direction is up. And so what's appropriate is to capture those rates of return, but do so in a risk appropriate way so that you don't get punched in the face at the wrong time, just as you're about to go into retirement. You have to protect against that for sure.
I'm glad you brought that up because that is my next question. I understand when we zoom out, we can see that staying the course and staying invested is often the best advice. But if I feel uneasy about how I'm invested, when is the right time to make changes to my portfolio?
Yeah, well, it's not after you just watch Fox News or Kramer or
Right.
CNBC or Squawk Box
Yeah.
because I can go online any day, Aaron, and I can find like all kinds of people that tell me that the market's about to crash and die. And
Right.
I can find a lot of other people that say, hey, you're missing out on the next great boom. So in any event, it's incumbent on every investor to work with their planner, build an all-weather plan that's designed to plot and move through the wax and wane of the market
Mhm.
ups and downs, because it is going to fluctuate. We know that. We know and sometimes it's going to fluctuate severely. So we have to build a plan that can only fluctuate to what you can handle or what you can tolerate. And there's a
Yeah.
lot of great tools to do that.
Right. Well, and how does that answer change for someone who is recently retired or nearing retirement?
Boy, if you're in what I call a red zone, if you're getting
Yeah.
in or near or you're getting close to retirement, it's really important to have those assets fine tuned. You may want to have some assets that are particularly absolutely safe from market risk, safe from volatility. You might want to have some in a place that are designed for growth so that they can ride the ups and downs and highs and lows. Ultimately, you have to put a plan together that is going to help you sleep well at night, or what we call SWAN, sleep well at night.
Yeah. No, that's such a good point. And we can't have this conversation without talking about sequence risk. For people who are recently retired, a down market presents a really unique challenge. Can you explain this for me?
Yeah, Aaron, I spoke to a group of investors recently and I asked them if they were familiar with the term sequence of returns risk. And I think one hand went up out of about 25 people I was talking to. So obviously, mainstream America is not familiar with that term. And all it means in its simplest form is that if you go into retirement and you stopped earning now you're starting to pull money out to live
Exactly.
on.
Mhm.
If at the same time the market takes a big drop, the combination of your withdrawals and the market drop can create an internal mathematical conundrum to your portfolio. The net effect, it can cause you to run out of money prematurely, maybe in your 70s or something like that. So there's ways to guard against that sequence of returns risk. Some people use bucketing plans. Some people say, okay, I'm going to have a pot of money that can't drop down. Yeah, that's a great illustration right there. You may have part of your money in something that's absolutely safe. That might be the bucket that we pull income from in a year where the markets are suffering some. We know the markets always come back and reach new highs, but we don't want to take money out of accounts if they're down temporarily.
Right.
Yeah, so we solve for safety, income, and growth. It's easy to do. It's some custom work for each investor, but ultimately, Aaron, it can result in a high level of peace of mind.
And like you said, that's what it all comes back to, because of course we can't control the market on the day that we want to retire. So all we can do is have a plan for whatever the market does when we want to retire. Dan, that being said, if somebody would like to sit down with you, create that plan so that they have peace of mind, what's the best way to reach you?
Aaron, just real simple. The office is 281-466-4843 or our website at providentwealthllc.com.
Great. Dan, thank you for your time today.
Thank you.